Hello, my name is Fred Amrine and welcome to College Affordability, a website designed to help parents and students lower their cost of education. Today's topic is federal versus private student loans. In previous videos we've talked about the ownership or the legal responsibility of the loan between the parent and the student. This program is going to describe the difference of what the federal loan programs have versus the private student loans. So on the federal side, there are some loans that are interest-free while the student's in school. This is primarily the Perkins and the Stafford subsidized loans. Again, these will be determined by the need that you have by the school's financial aid officer. With federal loans also, you have better repayment options when you're finished. So there's 8 different methods currently that are available. Again, this can really help you as you go down the path, and especially if you're going to go to graduate school or going to do something like that. The federal loan programs, if you can stay under that umbrella and the loan limits, are probably a better option, especially if you're going to be in a loan forgiveness type of career. The other big advantage too with federal loans is that there's a death and disability coverage that's associated with each of those loans that is tied to the ownership of the loan. And also with the PLUS loans, it is tied to the student indirectly. Also, there's easier consolidation, so when you're done completing your education, the consolidation process is much easier on the federal side than it is on the private side. There's only a few companies that do the private consolidations. The downside to the federal student loans is that the interest rates are a little bit higher currently based on the current methodology. That may change, but if you have a good credit score, your interest rate could be lower than the rates that are published currently under the federal programs. Private loans are a little bit different. Typically with a private loan, you'll need a cosigner. So the student will sign for the loan, but also they'll require a cosigner. And as we said in the other program, understanding the release of the cosigner is an important thing to look at before you sign that loan. There are higher limits for the student on the private loan side than there are on the federal side. Now the private student on the parent side, those limits are the same for the most part, but on the student side they are different. Your rates are typically variable, and it is based on your credit score. So if you have good credit, you can get a variable rate that's fairly attractive. But again, as the cosigner, you will increase your personal liability. As we've said numerous times throughout these programs, that student loan is not forgiven by bankruptcy. So as a cosigner, you will be legally responsible. And there are limited repayment methods. There's only really the extension of time to pay these loans back. Unlike the federal programs, there's income-based repayment and different programs. There is no loan forgiveness programs for private student loans. So that's an important part to realize. Hope we found this information helpful. Again, College Affordability is here to help you go through the financial aid process and then finding the best ways to pay for college. And Repay for One is a website that helps with the student loan consolidation and repayment. Thank you and have a great day.